So if you should look at it now, we are on the 24 hours time frame on volatility 25. See it, clearly can see it, clearly can see it. This is what I have to look at 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 what I have explained to you. A downtrending market is a market that creates move like this today.
Yeah.
And you can see on this market, yes, it's a downtrend, but it's not like a stiff downtrend. You'll see more of it moving to this down as in sides. It's not moving upwards, so that way it's not moving upwards like this now. It's not moving upwards like this. But we can see that the market is moving in this particular manner. And what will you call this? Yes, so what will you call this in the market? What will you call this kind of pattern in the market?
I can see.
Can you see my screen?
I can see it.
So what kind of pattern is this?
This market structure is usually lower, higher, and higher low.
Okay, that's one thing, which is fine. But what else again is the structure doing? Is it going to the upside? Is it going to the downside? Or is it going sideways?
No, it just maintain one part. Look more like a shopping market.
Exactly, which explains the reason we call it a ranging market. Are you with me?
Yes.
So, yeah, so this is a ranging market. And now, where did the range start from and where is it heading towards? We can clearly classify that the range is starting from this particular level. Now, it came from the downside, which is a very important information. It came from the downside. It started from this particular area, which is on the 24 hours time frame. And we can also see that the market several times has tapped this particular level using the most recent level. Originally, we'll use from this low here, but then let it break this level, then we'll be able to focus on this particular low as our next target. You understand? So now, having understood this particular one system now, what is the next thing we now have to look at? Are you with more trend? 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 Are you with me? We are thing we want to see, 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 thing we want to see. We want to understand the character of the market. We want to see that market has been pushing to the downside, wanting to break this low now. Market came up, then did not break it to the downside. Now cleared out those people that had stop losses here. Are you with me? How do we look at it? How do we pick this clear out? How do we say that market has been able to clear out this particular structure? You know, if you took a sell in the market, or if you were looking at the charts, the market created a resistance that gives you a potential level for a sell, you would actually be taking sells here without looking at the market structure, without having this information. You just take your sell here. And then what will market do? Market will swipe you into profit a little, thereby trying to give you, making you feel you are in the right trade or you are taking the right decision. And then the market makers, those who have the most money, will be waiting to take their sell from here. Why are they waiting to take their sell from here? They are waiting to take their sell from this higher level because they understand this thing that I'm teaching you now, which is they understand that people's stop losses are here. Are you with me? Yeah, so they understand that people's stop losses are here. Basically, they understand that people's stop losses are at this point. and they want to dropped to the downside and rallied again to the upside. Now, when they rally to the upside, they've cleared this people's stop loss. So they can comfortably now come again to the downside, clearing this low. So when they've cleared this low, it now becomes a break of structure, and this level becomes our liquidity grab, our liquidity. Here now becomes our break of structure. Are you with me?
Yes.
Here now becomes our break of structure. Here now becomes our liquidity. Now, when we understand that we have gotten our break of structure and we have gotten our liquidity, what are we looking? Next thing we are looking out for is market to move. We now want to mark this level as our swing high. So that level which took out liquidity becomes our swing high, while the low which created the retracement to the upside becomes our swing low. So when we take out the level that took out our liquidity and the level which began to create our retracement to the upside, which becomes our new swing low, which is this point. This particular level from our swing high to our swing low, we call it, we now mark it, we mark it with our Fibonacci. Are you with me? So we now mark it with our Fibonacci, yeah. So when we mark it with our Fibonacci, we are not looking out to take our sales from this level. Originally, this level. Now let me explain. 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 Now let me explain this Fibonacci for you. The Fibonacci, which is 0.00, you can see. Now it's basically counting the number 0 to 100, which is this point. Are you with me? Now, from this particular to this point, let's round it out parts, 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 let's round it out to the number of 60. Of 80, 80, but this is level 60, 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 this is level 60. Numbers are different, which is 0.79, 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 all of that. 50. Take any trade, whenever we trade, below this point here, we are not looking to take any trade. We are only looking to get above it, and then we look to take our trade and we look to sell. You understand? Using this particular structure. So today I will not explain anything concerning a buy structure. I will just give you a sell structural market. Are you with me?
Yes.
Now, good. So now, looking at this particular market, what can we clearly do in this particular market? We can clearly understand that we are only going to be looking out to take sales, not even from the 0.5 level, but only from this level, which is here. So whenever market retraces into from this particular 618 level to this point, these are the levels we are looking to take our entries from here to here. Now, if it taps into this price line, which is this level, which is our 0.618, when market taps into this line, we look at setting our first stop loss here and setting our take profit at this particular level. Now, the course I actually sent you, you would understand that this is the level for our take profit. But ideally, I don't use that level a lot. I majorly use this point. Are you with me? Why?
Yes.
Because it gets to hit take profit more often than not. You get, and it just gets to hit take profit faster. This level also hits take profit, but it will consolidate. After market breaks this level, it will consolidate around here, take some time, maybe 2 days before it gets to hit take profit sometimes. Now, this is for the first entry. Now, when you take your entry at this point, the market moment price taps this level, you take your entry, and then your sell is to target at this point. Now, you also have a supplement and at 0.61, 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 at 0.618, 0.79 level basically. You understand? So this level is our supplementary level, which is our second entry. Why do we look out for taking entries at this particular level? We look out to take entries at this level because whenever market hits this stop loss, it now taps into our next level, which is this particular higher level. We now want to take our entry from this particular point down to this point. So if it hits our first stop loss, the second trade, if it goes to our take profits, will put us back in profit of this loss and still make us money at the end of the day, thereby closing us in profit. I don't know if you get the ideology around this pattern. So now, let's look at the market itself. So now, our break of trend line. We'll be making another video explaining how to draw a trend line break. But then, we are just going to draw a trend line connecting from this low to this particular high. What we clearly saw was we have the left, 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 the level which God gave us our from this point, connect it from this point, connect it from this point, connect it from this low to this actually to this point, to this point, this point, to this point, this point, to this point. So connect it from here. So now, so now, so now, so now. The pattern tells us that anytime we get a break of trend line, we take our entry. Now we got a break of trend line here. If you took our entry and put stop loss, we are out. We get a break of trend line here. If you took our entry and put stop loss, we are out. So that's why I don't like the second one. I just prefer the first one. Now, if we're taking our entry at the break of this trend line, that's not actually how we use the structure. Now, what do? We want to understand the pattern market has created. We can go to the 1 hour time frame so that we see the market clearer in a clearer form. Now, what I just explained to you is what I want to show you in live chat. So I believe that will help a lot. In the meantime, let me get my channel. So